So there is a new rule coming in on May 1st that will increase the cost of a mortgage for those of you with good credit scores and a down payment of around 20%. Yes, you heard that right, like the things that would normally guarantee you the good rates, okay? We're living in a bizarro world. Well, that is what Fox News, etc. are saying, and it is true in a way that if you have a good credit score, you won't get quite as good a deal as you used to. They say in their article on this that someone with a credit score over 680 will, on average, pay $40 more per month on a $400,000 house. So that would be $480 more per year and $14,400 more over the life of a 30-year mortgage. And it is pretty shocking when you put it like that. But let's tell you exactly how this works out, and you can then make up your own mind what you think about it, and I'll also tell you what I think. So here's an explanation of it from a site called Mortgage News Daily, which is an industry-specific publication. I've never read it before, and I probably will never read it again, but it has a really good explanation for what we need today, since Fox News, MSN, etc. didn't really explain it properly in their articles. Now, Mortgage News Daily explains that a certain specific type of mortgage fee, the structure of that fee is changing. Now, these fees are part of your closing costs, but often they will actually be rolled in to your mortgage in the form of a slightly higher interest rate. Now, here's an explanation of the type of fee that this is. This refers to loan level price adjustments, LLPAs, imposed by Fannie Mae and Freddie Mac, the agencies, the two entities that guarantee the vast majority of new mortgages. Now, the article explains that the changes to these fees are coming in on May 1st, although in reality, most banks will probably adjust at a slower pace, okay, a longer timeline. But here's the crux of it. The effective penalty for having a credit score under 680 is now smaller than it was. It still costs more to have a lower score. For instance, if you have a score of 659 and are borrowing 75% of the home's value, you'll pay a fee equal to 1.5% of the loan balance, whereas you'd pay no fee if you had a 780 plus credit score. But that fee used to be higher because the fees are going down slightly for people with lower credit scores and going up slightly for people with higher credit scores. And they actually show you a heat map of who is going to feel these increases the most. Now, this isn't who pays the highest and lowest fees. Everyone at the top of this with the higher credit scores still pays lower fees. Everyone at the bottom still pays higher fees, but this is giving you the adjustment amount, okay? Whose fee is going up slightly, whose fee is going down slightly. And you'll see it's the people with credit scores between 720 and 760 who have down payments of around 20%, i.e., the ideal area that most people who buy houses aspire to be in. They will see the largest increase in the fees that they pay. Now, although that is shocking, there are going to be a lot of people paying slightly higher rates. People at the lower ends will really benefit. Instead of people with terrible credit scores paying 13 times as much in LLPA fees as people with excellent credit scores, they will only pay about 7 times as much, according to one comment from someone who seemed to know what they were talking about on a Reddit discussion I was reading on this topic. So, maybe it was actually kind of unfair on those people in the first place to be paying 13 times as much. I'm not sure. Let me know what you think about that in the comments. When you read the articles about this with the sensational headlines, it does make you feel that it's wrong to be punishing people with the higher credit scores. But then again, it's not really punishing, it's just rewarding them less than they used to get rewarded. They're still going to pay lower fees than the people with worse credit scores. What does seem wrong, though, is to be doing this when housing prices are high, interest rates are high, and we're actually coming into the spring selling season, right? Most houses sell in spring and summer. I think May traditionally is the best month. Now, we could go really extreme in ranting about this, like this letter on this subject that was sent to the editor of the Washington Times and published, entitled Sliding into Communism. And I certainly agree that I would prefer to see education and programs to help people with the lower credit scores raise up their credit score so that they could get the best rates by having a good credit score rather than having the rates lowered for them. Okay, that would be my preferred way of doing it. But then again, was it fair for them to be paying 13 times the rate of the people with good credit scores? I'm not really sure. Maybe 7 times is fairer. But the one thing to take away from this is that it is still going to pay to just try and have the best credit score possible, since in addition to fees, there's also the interest rate, and people with high credit scores are still going to get the best interest rates, and they're still going to get the lower fees, just not as low as they used to. And they've also added 2 new credit score bands to the structure of the LLPA fees. So in the past, it just used to be 740 and above. That would be the highest, but now they've added in 760 plus and 780 plus. So if you have a credit score of 780 or above, which is tough to do for a mortgage since there's different credit scores for different things and mortgages have the strictest algorithm. But if you do, and your down payment isn't within 15 and 20%, you will be better off. If your down payment is over 20%, you'll either be the same or benefit. If your down payment is under 5%, you'll really benefit. In fact, everyone will benefit with a down payment under 5%, all credit score levels. So maybe this is a recognition of our economic times, that it's just harder for people to come up with a 20% down payment in this economic climate. Or perhaps the government just wants you to take out larger loans and get into debt. I'd love to go full Alex Jones on this.
I don't like them putting chemicals in the water that turn the friggin' frogs gay.
But yeah, I'm not sure if there is a conspiracy here, guys. It could just be a common sense update influenced by the economic times we live in. Let me know what you think in the comments below. For those of you who are in the mortgage industry or who have a better understanding of this, I will put links to that article on Mortgage Daily, whatever website, and also the actual tables from Fannie Mae where you can see all the rates of these fees below as well. If you want 12 free stocks for opening a brokerage account and depositing any amount of money with our partner Webull, there will be a link for that deal below as well. It's a great deal to take advantage of. It's going until the end of the month. Not sure if they'll renew it after that, so be quick if you want it. You can check out my video about 40-year mortgages on screen now. Please subscribe if you're new. I'll see you next time. Bye-bye.